Welcome to Economic News Desk. For July 18, 2026, we are looking at two high-stakes legal battles that are testing the boundaries of federal authority, one involving the very face of American currency, and the other a massive surge in event trading that could redefine the line between investing and gambling. Our first story takes us to the US Mint. The agency is preparing to produce a new $1 commemorative coin featuring the image of President Trump, intended to honor the nation's 205th birthday. While the move is being framed by the administration as a celebration of the semi-quincentennial, it has ignited a significant debate over the legality of the design and the long-standing tradition of keeping American currency non-partisan. Treasury Secretary Scott Bessent has stepped in to defend the legality of the coin. He points to a 2020 law that allows for special edition designs to mark major historical milestones, citing a 1926 coin featuring Calvin Coolidge as a historical precedent for such commemorative issues. However, legal experts argue that the rules governing presidential imagery have changed significantly since the Coolidge era. Specifically, the 2005 Presidential One Coin Act established a clear standard. A president must be deceased for at least 2 years before their likeness can appear on U.S. coinage. Critics, including Northeastern University professor Jeremy Paul, argue that bypassing this rule undermines the principle of maintaining a neutral, non-partisan currency. The concern raised is that featuring a sitting or recent president on money risks making the symbol of the nation appear to favor a specific leader over the country itself. This coin is part of a broader trend within the current administration to feature the president's likeness on various federal items, including passports and federal buildings. While the coin will be legal tender, it is expected to carry a surcharge above its face value. The Treasury has stated these extra funds are intended for community projects and historical preservation, though they have not yet specified the exact amount or where the money will ultimately go. For those looking to challenge the coin in court, legal experts suggest the path may be difficult, as plaintiffs would need to prove they have suffered a direct, specific injury to have the legal standing to sue. While the debate over the dollar coin plays out in the halls of government, a different kind of battle is unfolding in the digital markets. We are seeing a massive shift in how people trade on real-world events, and it is forcing regulators to decide if these platforms are financial exchanges or just high-tech casinos. At the center of this is Kalshi, a prediction market platform. During the recent World Cup, Kalshi saw an explosion of activity, processing approximately $40 billion in sports-related wagers. To put that in perspective, analysts estimate that traditional sportsbooks, like DraftKings and FanDuel, handled about $4 billion for the same tournament. This tenfold difference in volume has turned a regulatory question into a massive economic dispute. Kalshi maintains that it is a legitimate, federally regulated derivatives exchange. Unlike a traditional sportsbook, which acts as a house and takes a cut of every bet by betting against its customers, Kalshi operates by charging transaction fees on trades made between users. This distinction is vital. Because Kalshi classifies its contracts as financial products rather than gambling, it avoids the state gaming taxes that typically fund public services like education and water preservation. This regulatory distinction also allows Kalshi to operate in states like California and Texas, where traditional sports betting is illegal. It also effectively lowers the legal betting age from 21 down to 18. The American Gaming Association has pushed back strongly, arguing that Kalshi is essentially masquerading as an investment platform to circumvent state laws and taxes. The tension is already manifesting in state legislatures and courts. Minnesota has moved to ban prediction markets entirely, and Arizona has filed criminal charges that are currently paused by a federal court. Many legal experts believe this conflict is headed for the Supreme Court. The ultimate ruling will determine whether these platforms remain a legal way to trade on real-world events or if they will be reclassified as gambling. A decision that would fundamentally reshape the landscape of both the financial and gaming industries.